welcome Andy to GFF 23 to India. And probably today is going to be one of those rare occasions where we'll have somebody from Australia on stage and we'll not talk about cricket.
And as an Englishman who now lives in Australia, I kind of feel that in the recent Ashes we both lost, but that's okay. Thanks for having me, Ritesh, and thanks to everybody at NPCI and Global Fintech Fest as well.
Thank you, Andy. So let's start, by asking you about AusPayNet. The name sounds very fancy, but I don't think it's a fintech. It's a very, very established company with a lot of accolades to the credit. So why don't you tell us about what is AusPayNet all about, what you guys do in Australia?
Sure. So Australian Payments Network, or we shorten it to AusPayNet to make it easy, is the industry body and self-regulatory body for payments in Australia. So some similarities to NPCI, but we don't operate infrastructure. So we're more about being the home for collaboration, and that home is important because through that collaboration across our 152 members, which cover banks, fintechs, merchants, tech providers, we set industry standards, and we also seek to modernise and transform payments in Australia. And last of all, we also offer advice to government in terms of the policy settings for payments as well.
Thank you. I think so. You mentioned, few keywords that I picked up from your, your statement is, I think modernization of payments, driving collaboration, driving standardization, and I think somewhere also securing the core infrastructure. And you also mentioned that you don't operate infrastructure. So in a situation where you don't operate the infrastructure, and I think there are other entities who are operating it on your behalf, and you're looking at only driving standardization through them. So how does it work? How do you achieve your objective, your vision through other entities by way of standardization?
Yeah, so it's all about collaboration, and I kind of feel like I'm talking to an expert. I mean, you guys have 473 banks live on UPI, so compared to that, 152 members is probably easy to manage. But they do all have their own different interests. I think it's about being clear about, we operate in the collaborative domain, so we're bringing them together to set those standards or to do large-scale transformation projects. We're not in the competitive domain, so it's about forming that collaborative layer on which then competition can take place. And I think also, it's interesting when you think about those different interests that those members would bring. Vested interest would get a bit of a bad name. Actually, to us, it's skin in the game. It's an incentive to contribute to those standards. And so when we think about things like QR codes, we've created a standard for QR codes in Australia. Actually, not just having our members, but also having wider stakeholders involved, like consumers and merchant groups, is really important because they do have that skin in the game and that incentive. So it's all about that collaborative layer. I think the other thing is that when we talk about transformation projects, they obviously come at a cost, and so we're very big on a user pays principle. You only pay into those projects if you benefit from them. And an example of that is the ISO 2082 program that we've just managed, the transformation there in Australia. A lot of those migrations in other countries have been managed by the central bank, but in Australia it was us. And there only those members, banks and non-banks who benefited from that transition contributed to the cost of that transition.
Thank you. And the other thing I noticed about Australia is that I think there are 5 or 6 banks. They kind of dominate the market, and fintechs are coming up now. So how do you see this evolution of fintech ecosystem in Australia, where top 6 banks probably command 95 to 96% of the market share, and how do you see the room for fintechs to grow and probably take it to a next level, if I can say?
Yeah, so we've certainly seen quite a lot of the fintechs or payment service providers, PSPs as we would refer to them, join us as members, and that's because they see benefit in the work that we do, the standards that we set, the transformation that we do as well. I think it's a really interesting question, Ritesh, because not unique to Australia. I think a lot of other countries are looking at the same question. There's the question about how regulation can actually support that innovation, as well as protect consumers. So, I would point to Canada as another market that is going through the same question at the moment. I'd point to markets like the UK, Europe and Singapore as ones that have started to solve for it. So the kind of licensing of those payment service providers or PSPs that we've seen elsewhere sort of gets termed an e-money license. Actually, I think that those kind of licenses do two things. One is they definitely protect consumers. So as a consumer, I know I'm dealing with someone who is licensed rather than someone who isn't, and so there are a range of protections that come with that. The second one is around the supporting of that innovation actually itself. So what we've seen in other markets is where an entity is licensed, then other entities in the payments ecosystem will step up and support them. For example, with things like clearing and settlement. So settlement at the central bank, which a fintech probably doesn't want to do because it comes with an operational overhead, a technological overhead. It's more likely that they'll be supported by the wider payments ecosystem if they're licensed than if they're not. So we see that licensing and regulation is really, really important. And I think, again, looking at other markets, a lot of that regulation now is based on function that a PSP might be performing or a payment ecosystem participant might be performing. And so that ensures that you're not overly regulating, you're not stifling innovation, but you're effectively saying, well, if you perform the same function that a bank might perform, then you're regulated in a similar way. So it's what we call same risk, same rules, which seems to make a lot of sense.
So I'm going to twist that question and ask it in a different manner. So you answered it from a regulatory or business perspective. Now let's twist it and ask from a consumer perspective. So it's a highly penetrated market from the cards, plastic point of view. I think contactless is pretty big in there. And I think digital wallets have just started to come up. So how do you see future, evolving? Is there going to be competition or is there going to be convergence? And which product you think consumers are going to adapt in future? And this is also in view of whatever is happening across the world. I mean, mobile-based payments are gaining a lot of traction. So with all that going on and looking at the peculiarities of the Australian market, from a consumer point of view, how do you see things evolving? And maybe there's an opportunity for fintechs to play a role. So I think that's what I wanted to hear from you.
Yeah, no, again, an excellent question, and I think I might try and answer it by looking at the consumer perspective, but also the merchant perspective. So we tend to think about end users in the round, including the merchant community. So your summary is pretty accurate, Ritesh. In Australia, very early adopters of Tap and Go, which helped enormously, by the way, in combating fraud. And then certainly over COVID, what we've seen is an incredible adoption of digital wallets. So really moving away from the plastic form factor to using the wallet, but still in a Tap and Go type environment. I think fast forwarding on that will definitely change. As we do what we were asked to do in this panel and crystal ball gaze, you can certainly see opportunities for other providers to step in or other payment methods to step in. So the obvious question we have going forward, and this is where it does link to UPI in India, is the use of our real-time payments platform at point of sale or online. And so what gets called in other markets pay by bank, effectively we have that functionality through the real-time payments network. It's just about leveraging it. And so there's the question as to, the form factor for that, is that the phone, is that the digital wallet, is it QR code, is it both? So I think that will definitely change over time. The other interesting question there is the role of cash. So again, looking at the current environment that we have in Australia, cash usage for transaction is at an all-time low, but actually notes in circulation, banknotes in circulation are at an all-time high. And the reason for that is that people like cash as a store of value. They like it as a fallback mechanism. Now, logically, as we fast forward again, that's going to change. You would think that providers like CBDC or stablecoin, particularly offline. So this is where in the Indian context, I think about the digital rupee, the e-rupee, or UPI Lite. Potentially those offline mechanisms replace that store of value and that fallback mechanism of cash. So that will be really interesting to look at. From the merchant perspective, I sort of feel in Mumbai, the home of Bollywood, I should get a sort of TV or movie reference in. You're all aware of Game of Thrones. We used to talk about the game of phones. So where I use my phone to tap against a merchant who's using their phone to accept that payment, and that felt like crystal ball gazing. It's now an absolute reality. And I think that is coming back to your question. That's the real opportunity for different providers to really step into that merchant acceptance space. I think that's probably the competitive domain that's really up for competition is in merchant acquiring.
So I think you talked about a lot of promising opportunities and the initiatives. And what we've seen here in India is that the fintechs have really played a very important role, not only on the consumer side, but also on the merchant side, and some very, very interesting innovations that have taken place. So is it safe to assume that as a market, Australia will be an interesting place for them to explore and play some role in the ecosystem?
Absolutely, and I think what we see from innovators is their use of Australia as a bit of a test market. I probably wouldn't rush to say this in Australia, but I'll say it in India. The advantage we have as a test market is we're only 25 million people. So if you test and you test badly, it's probably okay as a global innovator. We're also incredibly early adopters of technology. So that Tap and Pay point I made earlier, our Tap and Go, the digital wallet experience, etc. Australians seem to be very good responders to innovation. So therefore, it's a pretty thriving test market for innovators coming in from overseas. And interestingly, we sort of feel we play a bit of a role in that in terms of the standards that we set. We're very keen on not setting Australian-specific standards. We try and leverage international standards where we possibly can. So, for example, the QR code standard that we have is based on EMV code standard. I think there's a session about that later on in this forum. So that international innovators can come in and compete in Australia and know that they can do that based on an international standard. Similarly, it supports Australian innovators competing overseas as well, so it's a win-win from that perspective.
So you talked about innovation. Now, I probably wanted to understand, when you talk of innovation, what are the 2-3 focus areas that AusPayNet is looking at? Is it to drive better consumer experience, or is it to mitigate risk and probably prevent cyber threats and things around it? So how are you looking at innovation as a piece?
Yeah, so I'd sort of come back to how I explained our role, because I think we have to do a few different things. So particularly within that payments transformation piece, I've kind of just spoken about how we think about standard setting from an innovation perspective, but the transformational modernisation of the payment system we see very much as supporting innovation. And so there are what would success look like in that regard? Well, the answer would be that we've simplified the Australian payment system, and we've modernised it at the same time. And in so doing, we've also protected consumers. So there's kind of 3 different flows within that. The simplification, I think most countries are really, really good at setting up new payment rails, and they're actually pretty terrible at closing down old ones. And so we're really keen that we get better at that. So we still have checks in Australia. They're about 0.2% of consumer payments. So they will go. Our government has just set a timeline to stop using checks themselves in 2028, and then to close the check system by 2030. So that's that kind of 7-year window. I think my view on that would be we could probably be a bit more radical, because checks are a productivity lag on the economy, and therefore we should be trying to get rid of them sooner, whilst being sympathetic to those who still use them. But let's get rid of that payment method. We've started the conversation on our direct entry or ACH system, because logically the use cases that it serves could be served through more modern payment rails, like our real-time payment rail, like our card systems, etc. And so let's try and get rid of those legacy systems. So that's really that simplification. The modernisation really is all about data, which maybe is another topic we might come on to. But whether that's ISO 20022 or it's using what we call our consumer data right, which is open banking elsewhere, effectively making payments enabled with richer data is a really key part of that modernisation. And then there's the consumer protection lens. So we think there are kind of existential threats to the security of payments over time, things like quantum computing that we need to deal with, and therefore really upping the game around security. And to part of your question, Ritesh, cyber security is really important, as is resilience as well. So we're currently undertaking a refresh of one of the payment system networks, for example, to inbuild resiliency to it.
Thank you. So they say, given what's going on in Europe currently, that there's one battle that's being fought on the ground, and there's another battle that's going on in the cyberspace. So how do you see threats in the cyberspace emerging, and what are your, if you can share, I'm sure, some plans around, using technology to mitigate those threats?
Yeah, so I might sort of broaden that out a little bit and talk about data as well as cybersecurity. I think there are a couple of things there. So I think of this as we store too much, we share too much, and we actually share too little, which sounds a bit contradictory. That's the fundamental problem here. So the storing too much. Unfortunately, cybersecurity attacks have value. That they're worth the bad actor attacking them through that vector because of the data that's stored. And a lot of that data that's stored is there because of regulatory reasons. So we really need to think about how much data we should be storing moving forward, and the regulations that underpin that. So as an example, we've had a couple of successful cyber attacks recently in Australia that got significant tranches of data, including former customers of banks. So a bank might have had a customer 7 years ago. It still has to hold the personal data for that customer. That doesn't seem to be the right answer. And that's a sort of wider point about sharing too much data. So I sort of think there's a real role here for what tends to get called digital identity. I think of Aadhaar here, moving into the digital realm. Can we share effectively binary credentials rather than sharing all of that data? So having, as you know, having sort of enrolled in UPI as a foreign citizen today, I felt quite a lot of data about me. Could we just have a binary credential that says Andy has a passport that's been verified by the Australian government, or Andy has a visa that's been issued by the Indian government, rather than actually sharing the details of those things? And so that's trying to deal with that share too much problem. The flip side of that, the sharing too little, is a bit of an ironic one, and that's about, you look at the bad actors here, and they all share lots of information with each other all of the time. Again, regulation gets in the way of particularly financial institutions doing that. There's a risk of tipping off the other financial institution if you share information, but we should be sharing information across the whole ecosystem in trying to deal with those kind of threats. That's really where technology could help us with that instantaneous sharing of data. In Australia, we have, for example, the Australian Financial Crimes Exchange that shares data real time on scams and fraud, and I think that's a pretty good model for how we should be attacking these things globally.
Thank you. I think that's the approach that probably is the only way forward, So thank you for that. I think I wanted to also probe, India and Australia, we are emerging to be strong partners to each other, in various areas, be it defense or even trade or otherwise. And, in terms of high level numbers, I think about 500,000 tourists from India visit Australia every year. We have close to 800,000 to 1 million people of Indian origin that are residing in Australia, and they send about $2 billion back to India every year. And on top of that, I think we have about 100,000 to 150,000 students from India who are studying in Australia. So I think the numbers are stacking up well, and I believe there is some trade deal which is also under discussion now. In such a emerging partnership, how do you see possibilities between the two countries? Because I think there is strong business case. So what are your views on it?
Absolutely, and coming back to your opening, even more tourists when India are playing cricket in Australia. I caught up with our federal treasurer last week, and he was talking about the student numbers, which the Indian student numbers are now back to pre-COVID levels almost instantly, actually. The Indian student population has come back to Australia, which is great. I kind of think about this in the context of the G20 and Financial Stability Board goals around cross-border payments. And I think, thinking about the session that Dilip had earlier here, he talked about some of the cross-border initiatives that NPCI have been part of, notably in Singapore. I mean, I think that's the logical, to me anyway, that's the logical solution here, is the linkage between real-time payment systems. I think when the G20 and the FSB looked at this problem, they were talking about potentially running real-time gross settlement 24/7, 365, things like that. I think, where you've got countries that already have real-time payment systems, why wouldn't you actually try and solve for that by linking them? And so I think in the same way that India is linked with Singapore, that's the real potential here for India to link with Australia. And I think Dilip said, through the Singapore arrangement, you're getting payments in 15 seconds, which is probably sounds about right. I mean, domestically within Australia, it's within 6 seconds. So I think that would be really powerful, actually. And the reason I sort of put it in the context of those G20 FSB recommendations, really fundamentally, what they're trying to drive here is, one is speed. Well, you would get that through the real-time payment linkages. Another one is transparency. Again, those real-time payment systems tend to use modern data, so you get that transparency. And then a third one is cost. You're leveraging the system that people are using domestically anyway. And then the fourth one is access. So, again, 473 banks on UPI, the access that NPP has domestically in Australia. It seems to be a really good solution for those quite lofty aims.
So I think, like you said, if NPP and UPI can kind of integrate with each other, then we'll be able to support person-to-person as well as person-to-merchant payments. And I think that would solve a lot for students who are studying there. And typically in India, parents tend to sponsor the education of the child. So it will, give them a lot of convenience. And I think it will also create opportunities for fintechs on both sides, if you kind of agree with that, because, I think fintechs go where traditional players don't go, and there is a strong business case in the overall value chain.
I think that's right. And if you look at cross-border payments, it's where there are some really landmark fintechs that have had some success there in sort of simplifying the process of cross-border payments anyway. I mean, interestingly, we just did in Australia a research project on CBDC, and a lot of the potential use cases on CBDC related to cross-border payments. Now, I mean, do those use cases actually need CBDC is a different question, but could they be furnished by a linkage between UPI and MPP? Very probably, and that would support those innovators.
So thank you. I think this ends up our conversation. I think we have a couple of minutes left, so if anybody in the audience, if you're okay with your kind permission, if anybody in the audience wants to ask Andy a question, then we'll be happy to take one or two questions. So I think we don't have Q&A for this, so my apologies. We'll probably catch up offline. So thank you, Andy, for your time. I think great conversation, and we picked up a lot of learnings for Australia market, which I think will inspire fintechs from India to look at Australia as a place to look at in terms of business opportunities. Any last comments from your side?
No, absolutely, and echo what I said earlier in terms of Australia being a great market for your innovators. So look forward to those kind of links supporting that. So thank you, Ritesh.
Thank you so much, Andrew. Thank you.